Hey everybody, it's Les Sulgrove, Statewide Housing Analyst for Iowa Realtors with the November 2025 Market Review. Let's take a quick peek and see what's happening in the real estate market. In particular, we're going to look at single-family residential this month. We're going to take a look at first about new listings and see where the new listings are coming in from around the state and the current listing activity or inventory levels across the state of Iowa. And then we'll finish the show looking at closed sales and the median sales price, as well as a quick review of mortgage interest rates and kind of how those are playing a factor in there. So these are the four categories we're going to start off with. So first things up is new listings in the state. Now you're going to look at this immediately and go, oh my gosh, look what happened across the state. In October, we brought on 4,466 new listings. And in the month of November, that dropped down under 3,000. So we've had about a third of the number of listings come onto the market this past month. And that's somewhat normal with the time of year. You can see the black line, which indicates where we were last year. So we're pretty much right on track with last year's numbers here at that 2,981. In fact, if we look forward to December, we could actually even forecast that we'll have even fewer homes come on the market in December. Now, why this feels different this year than maybe in previous years is because for the most part, we've been outpacing 2024 numbers. And here we are in November, kind of right where we were in 2024. So I would not be surprised if we get into December that we see a number that's closer to that 2,000 listing number like we saw last year. However, actual inventory levels at the end of the month are holding their own. So let's see where the top 6 counties were this month of November, where these new listings pretty much came on here. And so if we look here, 588 new listings came into the marketplace in Polk County, and that's our number 1 county for the month of November. 206 over at Lynn County, which is the Cedar Rapids market. And then you get over here to the Quad Cities market at 180, followed up quickly by Dallas County. So again, part of that Des Moines, Central Iowa market there is where a lot of listings came in. Johnson County, which is the Iowa City market, specifically the Iowa City area, came in with 115. And then Blackhawk, which is Waterloo, and that's part of the Northeast Iowa board. So a lot of the inventory that came in has been on the central or on the east or northeast side of the state, but we're going to see some other numbers that are going to bring in some numbers over here on the western side as we move forward here. So I mentioned a minute ago that even though we have fewer listings coming on the market, we didn't see a dramatic drop. We're still holding out there with inventory close to 9,500 homes on the marketplace. And that's still well ahead of where we were last year. So this is why I'm not too concerned with that drop for November and even December, that we're going to see a major drop down in total number of homes on the market. In fact, at 9,553, that's still the third highest level of inventory we've had at any month throughout the entire year of 2025. This is going to set us up for a very nice start for 2026, having this kind of inventory on the marketplace. So even though it might be a little bit less inventory coming on the market November, December, that's seasonal, that's to be expected. What we're still enjoying, however, is this buildup of inventory for the next year. So where are these counties that are holding this inventory levels? Again, basically those same 6 counties, Polk, Dallas, Johnson, Lynn, and Blackhawk County, and Scott County as well. So the fact that this is the areas where we saw the most inventory coming onto the market in November, it's boosted their inventory levels, and we're still seeing some pretty decent numbers across the state. For example, the Sioux City market over here is sitting with 182 homes on the market, 147 in the Southwest Iowa, Pottawatomie County is there. And then up here, 197 up here at the Clear Lake market area. So let's take a look at closed sales. Again, we've seen a drop this month, and it's actually dropped below last year's path here. We were at 3,089 closed sales in the month of October, and we have dropped to 2,489. This is a result of a little bit slower fall than we kind of expected. The month of September and October are where sales occurred that are basically coming in and showing us where this closed sale count for the month of November was. So 2,489 homes have actually sold, and that's a little bit slower pace than last year. I think that maybe we'll see this number kind of stay a little bit level as we move across through December next month, and we'll see kind of as we get into the first week of January where that number comes in at. So where did these sales contribute from? Again, Polk County and Dallas County coming in at 470 and 130. The Blackhawk County again up here at 111, and the Quad Cities and also the Iowa City Cedar Rapids corridor there. I want to make sure you notice here there's one county up here at the top that has 2 sales, and this is going to come into play here in just a second. So we're going to look at a couple slides, and then just remember there were 2 sales up here in this particular county when we come to that next slide after this one here. So at $245,000 at the median sale price across the state, we have still maintained, other than the month of January, we've maintained a larger increase in median sale price all across the state, and that 245 to 250, 255 has been fairly steady for the last 6 months or so. I think we'll continue to see December stay fairly close to that 245, maybe a little bit of a dip. It just depends here, but we're still going to be, I think, ahead of 2024's numbers as we end 2025's year here. And so now this is where we're going to see some new numbers. There's some new counties here. So Dickinson County up here at the Iowa Great Lakes area, 453 is the median sale price up there, the resort communities. Dallas County traditionally comes in at the higher end of the price point for the Des Moines and Central Iowa marketplace. Remember that market up there I said that had 2 sales? That's Howard County. Now, when you have 2 sales only, and one of those sales were $600 and some thousand, and the other one was about $220. That's where you're seeing the median sale price, or that middle point is of those 2 is about $411. So this is kind of one of those times when you look at the marketplace and you go, well, that's a false positive. I mean, it is true for the county up there that they had a median sale price of $411, but the general pricing, if we look at this year to date, was much lower. So when you see a number like that, understand that sometimes there are just few sales that are affecting the marketplace, but it did rank them 3rd place in the month of November at 411. Sioux County up here at 381 and Plymouth County at 352. This is that, the Sioux City markets up there also saw pretty good pricing. And then, of course, Johnson County at 353,000 here. So round out the top 6 counties for that price point. So overall, the state median sale price was $245, and that's what this black line right here indicates going across. This is the median sale price across the entire state. So these are the top 6 counties that basically outpace that. And as we move into the last couple of slides, I think I've got 3 more slides left. This is a reminder of where mortgage interest rates have been throughout the years. Now, Freddie Mac produces this particular report of the history of 30-year fixed average interest rates going all the way back to 1971. And what I've done was I've sliced this out by decades. So the 70s, the 80s, 90s, 2000s, 2010s, and now 5 years into the 2020 range. And what you can see is the median rate for these 10-year periods. Back in the 70s, the median rate for that decade was almost 8.9%. Of course, those of you who lived through the farm recession and the farming crisis of the 80s, we remember tremendously high interest rates, almost 20% in some cases. But the median rate for the entire decade was 12.8%. A little under 7%, or I'm sorry, a little under 8% for the 90s, and we started to see mortgage interest rates start to bubble down a little bit. The 2010 period, actually, that 10-year period actually has a median rate of 4.03% for that 10-year period. And as we kind of focus in a little bit closer here, let's go in and look at from 2010 through 2025 now. So again, here's that 10-year decade. that had that 4% median interest rate. What everybody seems to remember in recent years, obviously, is when we saw those interest rates at or below 3%. And in actuality, this has been within the last 5 years. What we've seen here is that a lot of homeowners and a lot of home sellers out there now are kind of, they still remember those rates, and many of them have that low interest rates, but we've been now at above 6%. In fact, we've been almost to 8% at a couple of times here in the last 5 years. The general feeling is that this is more of our normalcy, our normal interest rates. In fact, let's just jump right in and kind of see how this time frame went from COVID. So COVID hit about March of 2020, March 11th, and it officially ended May 11th of 2023. This is that period of time when we saw those really, really low mortgage interest rates, and we saw tons and tons of real estate sales in that time period based on the affordability of mortgage money. And again, now we've kind of seen interest rates kind of come up to around that 6 to 7% range there. In fact, if you look just at 2020 alone, this is really a good sign. Where before, after COVID hit, we've seen rates bubble up and down, but in 2025, for the most part, we've been really seeing interest rates start to gradually slow down. And this gives us a lot of confidence that in 2026, that we'll see rates a little bit lower. They'll probably still be within that 5 to 6% range. But I don't think we're going to see rates dramatically rise and stay above, at 6.25% rate as we move into 2026. It sounds like there's going to be more Federal Reserve cuts and a little bit of quantitative easing with the mortgage-backed securities. So we should start to see maybe a little bit of a slowdown or a little bit of a drop overall of the 30-year fixed-rate mortgage. So anyway, that's kind of the show. This is the slide I normally start the show with. This is our graphic that we talk about from the press releases. And it's a nice graphic. It's all available at iowarealtors.com, and you slide over to the housing statistics or market statistics tab. You can find all the graphics that are of the purple colors. Let's go back just one here. Graphics like these are ones that I add in at the end of each month, but you'll remember seeing like the housing stats here. This is the one that breaks it down by single family and condo townhomes, and also gives you an idea of essentially a snapshot at the end of the month of November. So a lot of you are asking, why do these numbers look different when I look at it online? This is basically a snapshot of time. So because we're working in a live database, every month we do see a lot of inventory come on and go off the market. So this is kind of the point in time at the end of November. So that's it for this month. We will see you all again in early January with the January market review. And thanks again. My name is Les Sulgrove. I'm the Statewide Housing Analyst for Iowa Realtors, and we'll talk to you all again in January 2026. Have a nice holiday.